Welcome to the July 2025 edition of our Orion Wealth video series. Summer is officially in full swing. Between fireworks, family road trips, and trying to keep your law from turning into straw now that the high heat has hit the Central Valley, we hope you're finding time to relax and recharge. As always, we appreciate you carving out a few minutes to stay connected with what's happening in the financial world. Now that we reached the halfway point of the year, let's look at how the markets have performed. Despite a rocky start and a volatile April, stocks have regained their footing. As of July 4th, the S&P 500 is up a solid 7.5% year to date, with the Nasdaq leading the way at over 9%, fueled by ongoing excitement around AI, tech innovation, and strong earnings from major companies. The Dow has posted more modest gains, up a little over 6%, as traditional sectors like manufacturing and financials have faced more challenges. Overall, the market has demonstrated impressive strength amid such uncertainty. International markets have continued to outperform the U.S. stocks for much of the year, thanks to stronger economic momentum in places like Europe and Japan, and more supportive central bank policies throughout the world. A softer dollar, down around 10% so far this year, has also helped boost returns for U.S. investors holding global positions. As for the Fed, there were no surprises at their June meeting. Despite early hopes for rate cuts this summer, the Fed chose to hold steady. Inflation has cooled quite a bit from its peak, but not enough to trigger a move just yet. Think of it like baking cookies. You don't take them out of the oven just because they smell done. The Fed wants to be sure inflation is fully cooked through before pulling back on rates. At this point, most market watchers expect we may not see a cut until late summer, or possibly even the fall. So, for now, we're staying the course and keeping an eye on how the data unfolds. So, how have the Fed's actions affected the bond market? The first half of the year has been a bit of a tug of war. The good news is that bonds are finally doing their job again. Yields remain attractive, and investors are seeing real income, something we haven't seen much in recent years. Short-term bonds stay popular for their flexibility, while longer-term bonds have faced some pressure as rate cuts get pushed further out. However, overall, it is the healthiest bond market we've seen in quite a while. So far, markets have taken the tariff headlines in stride. But as we saw in April, and again these past couple of days, things can shift quickly. While certain industries are feeling some pressure, the broader market hasn't been significantly disrupted. That said, trade policy remains unpredictable, and we're looking closely for any potential impact on supply chains and global growth. Recent tariff discussions have included key trade partners like Japan and South Korea, particularly in sectors such as autos and technology. Any escalation in those areas could have ripple effects, not just abroad, but here at home as well, given how interconnected global markets have become. As always, we're here to help you make sense of it all. If you'd like more timely insight, you can always visit the Insights and Resources page at ccmg.com for the latest from Clark Capital, or catch Bulls and Bears with Herb Morgan on YouTube for expert commentary from Cantor Fitzgerald's Chief Investment Officer. Thanks again for letting us be part of your financial journey. We hope your July is filled with good memories, cold drinks, and a little time to unwind. As always, we're grateful for the trust you place in us to help navigate your financial course. Have a safe, relaxing, and enjoyable summer, and we'll see you next month.